We will call this meeting to order. This is the May 11th, 2022 Finance and Revenue Committee meeting with myself, Nick Allen, Bernie Flynn, and Brian McGinnis. Item number 2 is comments, suggestions, petitions by residents in attendance regarding items not on the agenda. All right, seeing none, we will move on to item number 3, which is our pension management report from PFM for the first quarter of 2022, which will be interesting, I'm sure.
Yep. Great. Good evening. Good to see some familiar faces, some new faces as well. So as Mr. Allen articulated, what we'll do this evening is touch on the performance of the portfolios, talk about the markets, and talk about what we're thinking in light of all that's going on in the capital markets, geopolitically, et cetera. I'll briefly touch on 2020 just in light of the fact that the agenda item is fourth quarter, but spend more of my time here on since the beginning of 2021. So with that being said, we can go ahead and start with the executive summary. I'll spend most of my time just talking through the next 2 pages. We may make reference to specific pages later on in the presentation, but I think just to set a backdrop here, what you see at the top are broad index returns across domestic equity markets, international equity markets, fixed income, public real estate. And what we're seeing here for the first time in roughly 2 years are negative returns for the quarter. And we have seen a continuation of that theme into the second quarter. So if we think back 2 years ago, we were in the throes of the pandemic, more was uncertain about the world than was certain. And what we saw was action, swift action at that, taken by the Fed, taken by the administration, governments, not just here locally, but across the world, to stabilize capital markets and to provide support to citizens as we navigated the pandemic. What that yielded was really terrific performance out of equity markets. We saw unemployment go from 14.6% at its highest point down to, back to full employment, sub 4%. We started to see wage inflation pick up. We started to see real inflation pick up last year. And so our anticipation going into 2022 at PFM was that we would continue the global economic recovery that we were experiencing over the last couple of years, albeit at a slower pace. Right? We would start to see monetary policy tighten. We would start to see the economy open up, things of that sort. And we were expecting, returns to also normalize a little bit as well, right? Not seeing 26% returns, 23% returns out of domestic equity markets. So what we saw coming into the year was, the market starting to sell off a little bit, correct a little bit, in light of expectations of tightening policy, rising interest rates, and whatnot. And what really drew a greater degree of uncertainty on top of what was expected is the conflict between Russia and Ukraine and continuation of the zero COVID policies in China, which have continued the supply chain constraints that we've been experiencing. And what that has resulted in is not only higher commodity prices, higher oil prices, driving inflation higher, but a continuation of supply chain constraints driving inflation higher, and a more aggressive Fed as a result, with expectations of interest rates rising more than originally planned. Initially we thought 4 or 5 times this year. Now we're up to possibly 9 times with a terminal rate of 3%. So the market has been trying to digest all of that, and I just sort of share that backstory because that's what we're seeing. And when our clients have been asking us, what is it that we're doing? The one thing that we want to be mindful of is, we're not trying to time the market. We're not trying to, be cute about, moving to the sideline or getting back in. What we do recognize is that the market volatility, is mostly a result, not entirely a result, but mostly a result of headlines and, all the events taking place in the market as opposed to corporate fundamentals and economic fundamentals. We are seeing areas of softening, no question about it, but certainly not to the point where markets should be sold off 17%. So I just wanted to, and that's as of yesterday. So I just wanted to kind of offer that. So that being said, where are we, broadly speaking? So markets are down 17%, domestic, international, relatively the same. Fixed income down roughly 10% or so. Really across the entire fixed income market, you look at the aggregate, you look at high yield, roughly the same. And really driven by, we talk about that economic update, but, I feel like I hit on the high level themes that have been driving the volatility that we've been experiencing. So when we take a look at page 1.2 and we take a look at performance, I think just to when we look back, page 3.3, and I just say this before we get into the returns for the past quarter, but when I look back the last 3 calendar years of performance for these pension funds, there's been very strong performance overall. Almost a 45% cumulative return, give or take, across the pension funds. 2019 was a 20% return relative to the benchmark of 19%. 2020, 16.6% relative to the benchmark of 12.35%. And 2021, 12.63% relative to the benchmark of 11.12%. So you can see, it was on page 3.3. So I say that just as a recognition of where the portfolios have come since 2019. And not only have we seen strong performance, perfect, so the top of the page there. So not only have we seen strong performance in 19, 20, and 21 on an absolute basis, but also relative to the broad market, to the benchmark that we are looking to outperform, have added value over and above that benchmark number. And so I just share that because when we look at the returns of the portfolio today, sorry, I'm about to do this, but I'm going back to page 1.2. Yeah, sorry. So when we look at the portfolio today for the quarter, the police pension fund and the non-uniform pension fund are down about 6.25% and 6.19% respectively. You can see the benchmark return down about 4.5% or so. Year to date, same number. The 1-year return, you can see about 3.24% versus the benchmark of 4.05%. Some slight underperformance for the 1-year period, primarily attributed to what has happened this past quarter, hence why I was making reference to the calendar year return. But you can take a look here longer term, and that's the way that we want to think about this fund, given particularly the police pension fund being an open plan, that over the long term, on an absolute and relative basis, has met the discount rate for the pension fund for the 3-year, 5-year, and since inception period on an absolute basis and strong performance relative. So I just wanted to share some, provide the historical context just given all that's happening. So where are we today? Pension fund, the police fund is down to about $41 million. So April has been a tough month. Non-uniform fund is roughly $21 million. So down about $2 million since the end of the quarter, bringing the year-to-date number down 8.9% additionally for this quarter. So overall, about a 15% decline since the start of 2022. So we haven't quite given back 2021's return yet. And I'm not suggesting that we are, and I hope we don't, but we don't know what the markets will give us. But just wanted to provide that context. 2 other points I want to make, and then I'll open it up for questions. First and foremost, why did we underperform the benchmark? I don't think it's often that we've come here and there's meaningful underperformance like that, so just wanted to touch on it. Largely due to the international managers in the portfolio underperforming. The domestic equity allocation performed in line with the benchmark. Fixed income outperformed the benchmark slightly. The international equity managers did underperform for the period, and it was their underperformance that drove the underperformance for the portfolio. So then comes the question, okay, Bikram, what is PFM doing? What have they been doing? How are we managing the portfolio? So what we've done here on the left side is just summarized some of the changes that our investment committee has made since the beginning of the year. But just a couple points I just wanted to hit on. First and foremost, what we've done overall is attempted to de-risk the portfolio. Once again, right, we're not trying to time the market, go into cash or do anything like that, but we're looking at areas where we can take risk off the table. And so what we've done is we've lowered the allocation to domestic equities and international equities broadly. We've added to fixed income. We've also added to what we categorize as REITs and inflation hedge within the portfolio. So REITs represent public real estate. Inflation hedge represents commodities funds through PIMCO and Invesco. So the commodities allocation is a simple hedge to inflation. REITs are diversification, and plus you have the opportunity for income as well as capital appreciation through that allocation. So we have reduced broad equities in favor of those sub-asset classes to help diversify the portfolio. In addition to that, within asset classes, we've made some changes. We've lowered the allocation to emerging markets. But I think importantly, within fixed income, we've added a floating rate fund through Pacific Funds. And the floating rate fund has a 3-month duration, so it lowers the duration of the overall portfolio, the fixed income portfolio, by about a year relative to the aggregate. And so what that means is that as interest rates rise, the price of bonds fall. And so the lower the duration of the portfolio, the less that price sensitivity is. And so the expectation is that the losses you would incur as a result of rising rates will be less than if you were at the benchmark. So that was the decision that we made as well. Over the long term, rising rates do help the income side of the fixed income, and so you are made whole over the long term. But immediately, that price impact we're looking to dampen a bit. So we did make that decision as well, among some other smaller decisions that we made on the portfolio. But those were the 3 big ones. Adding to inflation hedge, de-risking, and shortening duration. So I'll pause there and see if there are any questions.
Thank you. What's the overall allocation for each of the pension funds, stock bond ratio?
Yeah, good question. So if we take a look at what I'll do is actually on this page. So if you look at the blue bars represent the allocations in the police pension fund. Yellow bars represent allocations in the non-uniform pension fund. And the gray bars represent the strategic target allocations that are outlined in the investment policy statement. So you can see that both funds have the same strategic target to asset classes across domestic equity, international equity, REITs, inflation hedge, fixed income, and cash. And then the blue bar and yellow bar represent where we are currently underweighting and overweighting.
Roughly about 60-40.
Roughly about 60-40, yes.
And what is the, regarding these funds, and what percentages overall, or how many index funds are in the overall portfolio versus actively managed funds that obviously are taking a huge hit?
Yep.
And also, what about the expense ratios for those various funds as well?
Sure, great question. So what we can do actually is navigate down to page 3.1, Ken. Excuse me. So just from an investment philosophy perspective, I should share, when we construct portfolios, we believe in dynamic asset allocation. So, overweighting, underweighting around strategic targets. We also believe in constructing portfolios using a combination of active and passive management. We feel at the end of the day, investment costs do matter. And so we should only use active where it makes sense. So what you can see here, looking at domestic equity, you can probably maybe better see it up there, that domestic equity is largely, aside from a 3.5% allocation to Jensen, all passive across Vanguard and Invesco, as well as iShare ETFs and mutual funds. That represents just the fact that we feel that domestic markets are inefficient. It's been tough for active managers to outperform, and so that's the option that we go. Within international equity, you can see that we have about a 5%, or rather a 7% allocation to passive strategies through Vanguard Total International Stock ETF, as well as the Developed Markets ETF. Everything else is active, though, in international. We feel that there's international markets are less efficient, different regulatory environments, different economic environments, and so there's an opportunity for active management to outperform. Now, we haven't seen that this quarter, as you see in the numbers, but if you take a look at since inception numbers for some of the active strategies, they've certainly added value net of fees over time. If we scroll down further, in REITs right now, so in REITs, we are entirely active. The last time we were allocated to public real estate, we were actually entirely passive through the Vanguard REIT Index. But given the state of the real estate market right now, where valuations sit in certain asset classes within real estate, we see real estate as a bit more opportunistic, and so we've decided to go active in this instance. Obviously, if we didn't feel that, we would have gone back the passive route. The inflation hedge allocation, that's active, just given the fact that it's a commodities inflation hedge, is a very active tactical allocation. We don't see it as long-term in nature. We're just trying to hedge for the 8% numbers we've been seeing recently. And if you take a look at those strategies, they've returned pretty strong returns, 25% or so over the last quarter. So they've certainly added value in the portfolio. And then fixed income, we are mostly active. When we take a look at fixed income, we feel that fixed income markets are very fragmented, largest asset class in the capital markets. There's a lot of opportunity. And with the rate environment, we feel if you own an index entirely, you're taking on that interest rate risk. And so given the rising rate environment, we feel there's an opportunity to be a bit more active there. We still have some passive management, through the intermediate term corporate bond ETF and the preferred and income securities ETF, but largely active. So I'd say on the equity side, mostly passive, fixed income side, mostly active, with international equity somewhat down the middle. So Brian, to get to your next question, what does all this mean from an expense perspective? 36 basis points. Weighted, yep.
How much is invested in international bonds?
So we do. Yeah, so it's a small percentage. We don't have a dedicated international bond allocation in the portfolio. Like the Vanguard Total International Bond Fund. So we don't have that allocation. However, the managers within the portfolio, PGIM, Voya, DoubleLine, Baird, they're all core plus strategies. So they do have the ability to invest in emerging market debt and international debt, and they do. But as a percentage of their portfolio, it's a very small percentage. And then obviously you weight it at 4 or 5% of the portfolio, it becomes even smaller. So not a very high allocation at all, but there is some.
I mean, the only objection I have is I'd like to see a little bit more passive management, of course, that background and everything with fees and returns and whatnot.
Yep.
And so that would be my only suggestion overall. But, 60-40 and you're well diversified. I get it.
Yep. Yeah. And I think that, and over time, hopefully you'll see this, that, and I know Bernie and Nick have experienced this, that, we are not static. Right, our lineup is changing, and there have been times where we've been 100% active in domestic equity, with passive and REITs, et cetera. Just given where markets are today, we have become a little bit more active, but still, mindful of that overall investment management fee. Questions?
Good. My Mendoza line, looks like I have a problem this year. I think we lowered it, Nick, if I'm not mistaken, and Brian, to 6.5% for the MMO.
Okay.
That's basically what we have to guarantee the pensioners. I believe we lowered it to 6.5 through our negotiations earlier last year, this year. Performance right now is what, negative 15?
For the fund, about negative 15. Yeah.
All right. So we have a problem.
Yeah. So when we take a look at the discount rate of the fund lowering to 6.5%, so if that happened last year, I would assume that will take effect the next valuation cycle. And I'm not the actuary. I'm just sort of saying this through my experience. So at the end of 2022, what your actuary will do is take a look at your 2021 return and your 2022 return. And with a 6.5% discount rate, you need to have a cumulative return of 13% to break even. So that's the bogey. If you're lower than that number cumulative over those two years, there's money that needs to be paid into the fund. Though I know that there are ways that it can be smooth and the impact can be felt a little bit less. And obviously, if there's excess return, different story. So yeah, 2019 and 2020 collectively, was a cumulative return of 36%. So there was certainly a lot of excess there. 2021, it was about a 12% return for the portfolio. So we're sitting here down, negative 3%, give or take. So, obviously the hope is that the capital markets will be kind enough to help us get there. I think not just for the pension fund, but all of us collectively.
Because I'm looking at 9.0, the break even, to meet the expectation, and because it'll have to come out of the
budget,
out of our budget,
Yep.
to meet the obligation.
Yeah.
And I don't think we budgeted for that for 2022. Looking at 2023, Mr. Metric says he has something. It is a magic ball over there.
What you're referring to, right, Councilperson Flynn, is the assumed rate of return that goes into our assumptions that calculates our MMO. So that's done on a 2-year cycle. So we'll see impacts. They'll be smoothed over 2 years. It's not a consideration that we have to contend with this year. But yeah, exactly. The performance of the portfolio is going to go into the next valuation done in 2 years. And if we get through the next 17 months and we're still looking at below assumed rate of return performance over that time period, you're absolutely right. The MMO will go in the other direction, meaning up instead of trending and
It'll
smoothing
go up, and
down.
then we'll have to take it out of the capital, the operating expenses, which we had to do a couple of years back in 2017 or whatever. It
Right.
wasn't very
Yeah,
good.
20, yeah.
Yeah, because we set the Mendoza line, actually, we lowered it.
Yeah.
Because it was 7, so. whatever.
Yes, but certainly prudent, from a capital market expectation perspective to lower
I'm
it.
probably going to ask a question that may come across as rude, but don't take it that way.
Not at all.
If we're down 15 to 17%, does PFM take a 15 to 17% reduction in their fees?
Good question. So when it
Because Fisher Price, I'm playing with Fisher Price toys.
So-
Fisher Investments, does that. Fisher Price is the things your kids ride on.
yeah. So yeah, our fee is a percentage-based fee on assets under management. So as assets fall, our revenue falls. Yeah. Yeah, I mean, we feel an asset-based fee schedule aligns lies in interests, and that's yeah. So as the pension fund falls, yeah, no problem.
I don't have questions tonight.
Okay.
I officially made it way over my head there for a little bit. I caught up. I learned a lot.
All right, great.
So I appreciate that a lot. I'll reach out if I have any questions, but
Absolutely, please do.
I think I'm in good shape.
Thank you very
Yeah,
much.
thanks
Have a
for
great
coming
evening.
in. Yep. Any public comment or questions before we forge right on ahead?
Daryl's asleep.
All right. We'll head on to our discussion items tonight. We're going to move on to item 4A, which is to get an update on our responsible contractor ordinance. It's my understanding that we are, last month we voted to schedule a hearing for an ordinance to get this going. We had full council support for that. My understanding now is that due to some conflicts with our own code, it seems like there was a decision made that we needed to update part of our code and then use a resolution in order to have the same effect that we were looking at last month. So I thought it would be prudent just to have some questions answered right off the bat as we hit this agenda item with our solicitors here. So just to start it off, just for the record, why was this change necessary? Can you just get everyone up to date on what that conflict was and what the choices are that we could make in order to resolve that conflict?
Good evening. Thanks for having me. I wouldn't describe it as a conflict. What we did when we looked at this, you had to amend your administrative code to somehow incorporate the responsible contractor provisions. The model ordinance was both a model ordinance and there was also a resolution that accompanied that. When we looked at it, we thought that it would be prudent to combine those. In other words, combine the resolution and the ordinance into a single document. So we didn't make any decisions. What we proposed was that we would combine the two into a resolution and we would amend the administrative code, or we would propose that you would amend the administrative code to refer to that resolution, which are basically regulations for responsible contracting. It can be done the other way. We can enact an entire ordinance. We can do it precisely as it is in the model ordinance. We weren't trying to impose our view on anybody. We did have a brief conversation with Sean last Thursday, I believe, And we understood that there really wasn't any urgency to the matter because there probably weren't any contracts that this would be applicable coming up in the near future. So we suggested that I come to this meeting and explain what we've done. If that's not something that, if you don't want it done that way, that's fine. We can turn it back to an ordinance or basically follow the exact format of the model ordinance and the model resolution with a minor change to the administrative code, and then we can schedule that for a June hearing.
And now, is this when we're working with model ordinances like this, is this result like a standard practice? Is this something that you've done or that is done by municipal solicitors?
There are other model ordinances that we adapt to the specific municipality.
And then can you explain maybe not go in the weeds too much, but a little bit the nuts and bolts of why we needed to update the administrative code to make this ordinance work?
Because the administrative code already has what we would call procurement regulations in it. And some of those may be in conflict with these regulations. So by making that, to make it clear, we would enact or propose to enact a simple amendment that says, notwithstanding anything in the administrative code to the contrary, for all contracts over $250,000, all public works contracts, the procurement the contractor certification requirements would apply.
So trying to understand our options here, it sounds like there's three different things that you've mentioned tonight, like three different possible courses forward. One is amending the administrative code and using that to refer to a resolution. One would be amending the administrative code by ordinance and passing an ordinance that has the, basically instead of the resolution, doing the ordinance. And then the third would be just running forward with the ordinance as written without amending the administrative code.
Well, I think you have to amend the overall borough code somehow to incorporate these requirements. And sometimes that is done by you enact an ordinance, and then the borough sends it to general code, and they decide where to incorporate it into your code. So really, options 2 and 3 you're mentioned are the same, basically the same. So it seems to me there are two options, either what I would call a simple amendment to the code and the resolution, or a more complex amendment to the code, which would incorporate everything that's in the model ordinance. And by the way, the resolution incorporates everything that's in the model ordinance. We didn't make any substantive changes to anything except to put in borough where borough had to be inserted and some things like that.
And then can you talk us through the pros and cons of each option? So just what are the advantages of doing it by resolution and the advantages of doing it by ordinance, and kind of explain your thought process on why we thought the resolution made the most sense?
Well, I think the advantage to an ordinance is when somebody picks up the code or looks on your website, they're going to see all the provisions that apply in these circumstances. However, that circumstance would be rare. In other words, a resident is not going to be looking for these things. It's only going to come up when a contract of more than $250,000 is on the table. So I would say that's the advantage. It's a publicly available document that everybody could see, the responsible contractor provisions. I don't know that there's any disadvantage or advantage to the resolution. I think some of our thinking was that typically procurement regulations are that. They're regulations. They're not necessarily codified in an ordinance. You have to follow them, but they're not necessarily in an actual ordinance. I don't think substantively there's an advantage or disadvantage to either one. If the borough wants to proceed with an ordinance, that's fine.
So,
I would say one other thing. The model, I'll call it the model resolution, of course, if you went that route, that would not be available by looking at the code.
and then, so with procurement, I guess you're saying that it would be considered more of a standard practice to pass our regulations with procurement as resolution? Is that when we are making changes in our procurement strategies, you're saying that what's normally done is a resolution that's
I can't say that it's normally done. For example, the federal government has what they call the Code of Federal Regulations. The books would take up half that wall. So they've decided that there are ordinances, there's law, they don't have ordinances, but there's statutes, and then they have regulatory requirements. So this would be similar to that. A resolution has the force of law. I mean, it's still something that these bidders will need to comply with. It's just that you wouldn't put it in the code.
okay. Got it. I think, trying to see, that lays out a lot of my questions, and I think that kind of clarifies what we're talking about here with a couple of options. So it sounds like functionally there's not any difference in enforcement or content, whether we would go the ordinance route or the resolution route. Is that correct?
Yeah, that's our opinion. I know Mr. McGinnis has expressed to us that a resolution isn't as forceful as an ordinance. That's not my experience. That's not my opinion. But again, we're not here to disagree with whatever council wants to do. It's your decision. We think what we've proposed does the job, so to speak. It gets you where you want to be. But if you don't want to do it that way, we don't have to do it that way. We had no motive or anything else for doing it this way.
Okay, thank you. And then I think, since you were mentioned, I'm interested to know your thoughts, Mr. McGinnis, between, doing this via resolution or doing this via ordinance. I imagine you're preferring an ordinance. I'd just be interested to get your thoughts and what you think about the difference between the two options.
Well, there is a distinct difference. And Mr. Esty, could you define for the taxpayers and the council the definition of an ordinance for me, please?
I feel like I'm at the Senate now, but
I know, but it's $195 an hour here for your mistake. Could you please define what an ordinance is?
an ordinance is municipal sense, or at least at a borough level, is a law. It's like a statute that the General Assembly passed.
Correct. And what is a resolution?
Resolution is also a law.
It's not a law, it's a policy. It's a municipal policy.
It's not a policy.
It's not,
again,
sir.
Mr. McGinnis,
Sir, you're wrong.
I have to leave. and
I know you
know
have to
that.
leave. It's convenient that you have to leave.
I don't want to argue with you. If you want to do it, I'm not accusing you of being wrong.
Then why was this sent out, advertised, after the fact we voted on it? You made substantial changes.
We did not make any substantive change.
Yes, you did.
No, we didn't.
Sean, would you agree that the ordinance that we passed was different from what was advertised as a resolution by Mr. Esty?
It's different than what we've talked about last month. Yeah, sure.
Thank you.
It's different.
Mr. Esty, you also mentioned, so you talked about codifying. It's a big word recently with the Supreme Court and everything. I get it. I elected judges all over the place, okay? So I understand all these terms, the word salads, the things you're going to try to do. An ordinance and a resolution are totally different. An ordinance has an enforcement. It's law, as you mentioned, with local municipalities. Whereas a resolution is just a policy that it cannot be enforced. You know that. I know that. Then why didn't you do it initially in the first place to advertise it as the ordinance that was passed? Why did you change it? But it was wrong. And then you sent it out publicly without any input from the borough manager or borough council. When was it sent out? When was it sent out? Why? Thursday, May 5th, correct. Thursday, May 6th, it went out as an advertisement. Who instructed you? Mr. Metrick,
I thought the right thing to do was to go ahead and have our hearing on the 16th.
correct,
Correct.
but you didn't know that new ordinance or new resolution that Mr. Estee proposed went out. Is that correct? You had thought the other one was going to go out. Would that be correct?
I honestly don't know, and but I thought it could be handled. I thought the wrong thing would have been to cancel the hearing that we've already been told council had already been voted on that we would have.
Yeah, go ahead, Mr. Flynn.
Just to Mr. Metrick's point, and you can continue what you're doing. I think canceling the hearing would have been a prudent thing to do based on this is what we approved. And when I received the written documents on Saturday, the two of them were, the formatting and the information could have been almost like, could have been the same, but the formatting of what we approved in council was wrong. Was not the same. So you don't just keep making bad gravy. You stop and you start over. And to Mr. McGinnis's point, what we approved, what council approved, is not what was submitted for advertising. So there's a double error there. And, it's wrong. I mean, look, I spilled spaghetti sauce on my Ukrainian tie tonight, which really pissed me off. But I took the time to clean it off. So we as a group made a mistake somehow because the public got to see something the council didn't approve. And we should have stopped the hearing and started over. Thank you, Mr. Allen.
And I think the most prudent thing tonight for us to do, there's definitely I think a couple questions that we could still productively talk about, especially just for public record. But Mr. Metrick, would you mind? I know you said you expressed that the what was advertised versus what we discussed at the last meeting, that there were differences. Would you mind characterizing some of those differences? Was it just formatting or?
Yeah, it was formatting. It's consistent with what Mr. Estee has said. I don't have anything else to add.
Sure. So you would say they were not substantive. It was just a formatting change.
I'm not the legal opinion in the room, but the difference for me, substantive, non-substantive, is kind of like spelling error level stuff. So if you're going to move stuff around, then yeah, that is substantive.
Sure. I appreciate that. And I think what would be prudent tonight is if we could make a plan moving forward. I think we have, I would support taking this to June so we can start the gravy over and do it the right way. And I'd like to see us move forward with this as an ordinance. So we would have to, I know this is a discussion item, but we would have to recommend that to full council tonight. for next week at work session? Do we have a 3-0 to move that?
Yeah, and I would add, I would ask the solicitor to actually follow directions of the committee that was passed, follow the directions, okay? I mean, you're not a member of Borough Council. You circumvented the process. And now you got caught. So now we have to go back again and do this all over again.
All I would ask then is when the full council takes action, just communicate it to us. Because.
And
if-
we did.
Well, I
we-
can't speak to that.
Well, then I don't know what you can speak to then, because we passed this at the end of April. You held it for 20 days. It went out last Thursday. You had a conversation with Sean. It went out Friday. Okay? And it's totally different than what we discussed. It went from an ordinance to a resolution.
What I'm saying is I don't want the same thing to happen again. So.
And I don't think the same
if
thing
the
is going to
decision
happen
that
again
we
with you.
do is That do an ordinance that tracks exactly the model ordinance and the resolution, that we will do that.
And we did that. Why are we having this conversation today if we did do that?
Communicated to me.
So you didn't know about the ordinance then? Or you did? That was passed by council.
Say, in that format,
So then you took it incumbent upon yourself to change it.
we are paid to think.
You are paid to think, but you're also paid to consult. Is that not correct?
To what?
Consult with council? Is that not correct?
Well, we don't and that's, I don't at least typically communicate directly with the elected officials. I communicate with the administrators, in this case, the borough manager. I don't communicate directly with the elected officials.
And again, there is obviously a breakdown of communication with your skills there, that you communicated to Sean that something else is going to be going out differently than what council had approved. Would that be accurate?
I'm not sure I understand your question. If it wasn't-
You did send out as a public advertisement something completely different than
No,
what
I would not say it was completely different. I would say it was substantively. the
you change it
same.
from
That
change it from an
we-
ordinance to a resolution. That's totally
a true
different.
statement. And
That is a true
we
statement.
did that because we were told on Thursday that we weren't going to proceed in May. So, and then I was at a seminar, it happened to be one that Mr. Metric was at. And when I got back to the office at 12 o'clock noon, I saw an email that said, oh, no, we want to proceed with the hearing. By that time, we could only advertise what we had already done.
You already changed.
Did change it.
You,
Changed the
you-
format of
you-
it.
You changed it substantially because it went from, again, an ordinance to a resolution. Also, the safest way, you know this too, the safest way to update the borough code would have been, you could have said, hey, listen, we could update the borough code to amend it to reference that ordinance.
I said earlier, typically what happens is it goes to general code and they decide where to put it in the code.
Correct. And then again, to my original point, if it went out as passed, it would have went to general code, just as our neighbors in West Goshen just did a month ago.
I don't know what you want me to say.
Uh,
I
Listen, I'm speechless too.
I really don't know what you want me to say.
And I think
At the very beginning, we will do whatever the council wants us to do.
if
And-
I could jump in here, Mr. McGinnis, I think I think it seems like the biggest issue here is communication. Just for the future and just for clarification of the past, I suppose. When we schedule an ordinance, and let's say we schedule an ordinance next week for June, what does that timetable normally look like in your office, just with communication with administration? Was this like delayed a little bit more than normal, and then we weren't able to properly communicate what was going on? And my big question is more forward facing. How can we prevent this in the future? Is this something that could happen again? Because the good news is we're going to be able to do what we want to do. We're going to get it done, and it's going to be okay. But the thing I'm interested in is, I guess where the breakdown in communication began. Was it just that there was we just took a little too long to get the ball rolling, and then by the time we were rolling, we were past some advertising deadlines? And then I think,
One last thing.
yeah, sure, go ahead, Mr. Flynn.
Mr. Esty, since that document is on your desk, and it's pretty obvious that's what Borough Council wants, another revision or rewrite, can you move forward with that? Or do we have to go, or Mr. Metric, do we have to go back to full council again based on the hearing coming forward?
If I may, I don't think you need to, because if the council already authorized it to be done as an ordinance, we'll do that.
Okay, so we should, I'm assuming then we should, as a committee, recommend
Advertised.
to advertise or to schedule a date. Is that something we recommend as a committee, or is that something that we'll just? Yeah, so we can recommend scheduling a public hearing for this ordinance in one of our June meetings then.
Then what's going to happen with the public hearing on Monday, the 16th?
I'm assuming we would cancel that
Yeah,
public hearing. I'm assuming we're 3-0 on that.
Yeah.
Okay. Are there any public questions, comments, concerns on item 4A?
And Mr. Esty, I apologize. I worked hard on this, and I understand that mistakes are made. I would like to see this advertised, the ordinance that I passed, that this council body passed, advertised as soon as possible.
I want to make sure I understand. When you say the council passed, you're talking about the model ordinance that has an attorney's name at the top and a resolution that went along with that. So you did not see an actual ordinance that would be formatted for the borough, but the recommendation was we want to enact an ordinance identical to this model ordinance.
The exact same thing. And your firm, they represented West Goshen. It's the exact same thing, except for West Goshen is a second-class township. They have a different threshold.
All righty. Thanks very much. I think we're good then to move on to item 4B, which is our April 2022 financials.
Start with page 1, please. Good evening. So starting with page 1, the budget to actual summary by department for the year ended April 30th, 2022. We brought in actual revenues of $13,799,085. This was offset by actual expense of $8,341,649. This left us with a positive net position for the year ended of $5,457,436. Moving over to page 2, please. The April 2022 cash balances. Page 2, please. Did you take this from the website? So while Bill pulls that up, I'll go through it briefly. So we began the month with 13,463,443 in cash. We brought in 7,881,774 in receipts. We either spent or transferred out 2,555,417. This left us with a cash balance for the month of 18,789,800. Of that $18 million number, about 9.4 million is for operating and about 9.4 million is in restricted cash. Jumping around a little bit on this report, Bill, if you could go to page 25. Page 25 through 29, I have captured the interfund activity as well as the transfer schedule. Again, our interfund activity, we're on track to make sure that we're, transferring all the monies between the funds. So we're on track to do that for the month. And then looking at page 29 is a summary of the transfer schedules. As you can see, for the month of April, we did not make any budgeted transfers. We are keeping a close eye on the cash flow in the sewer fund. So just to make sure that there's, funding in there for the tertiary project, we have not transferred any budgeted transfers for the month. And as you can see on line 3 of this right here, we're still at $1 million that was transferred from the capital operating into the general fund. Looking at the highlights for the year ended April 30th, looking on the revenue side, I don't have a summary for this. Both EIT and real estate taxes are coming in very strong. We're in a good positive position with both of those items, and we are on track within the budget. We are planning to transfer the $1 million back from the general fund to the capital fund by the end of this month so that we meet our deadline of June 1st. As I mentioned previously, we are monitoring cash flow within the sewer fund. As we're all aware, there's a $1.5 million budgeted expense for the tertiary project. At this point in time, total project cost that we have paid out is about $617,000. So we still have about $933,000 left on that project to pay out. And looking at the parking fund, parking tickets and meter income is tracking well within budget, so we are good on those items as well. Looking on the expense side, police overtime is tracking very well within budget. There's no overages there. However, in public works and wastewater, we are seeing that tracking slightly above what the budgeted amounts would be at this point in time. And under the public works department, most of the snowfalls occurred on the weekend, so we had to bring in employees at overtime rates, so that's why that's tracking a little high at this point in time. And in the wastewater department, they are down some employees. They are working on that issue, but some of the employees have to kind of cover what the shifts are already at this point in time. Legal fees, other. This line item is $9,000 over budget at April 30th. This item is expected to rise throughout the rest of the year. In early May, we did make our budgeted transfer, the general fund portion into the fire fund for the fire contracts. That amount was $422,419. And then 2 big things. We have some invoices for American Rescue Plan funds that have come in. We have the street sweeper that we will be paying within the next 2 weeks. That totals about $245,000, as well as some HVAC invoices that are around $16,000. Are there any questions?
Where are we at on fuel cost as compared to last year?
So they are tracking high as well. That they're tracking high within all of the departments. Each department tracks their own fuel costs. You can see that GL number is 430.31. So if we were to go to page 4, you can see in admin, we're currently at 214, and we only have about $86 left on our budget. So I could go through each line item, but it is tracking high.
And continuing on that, is there a point where we would think about considering a budget modification for just to take care of those fuel issues?
Well, we're in April now. I think that by mid-year, we should try to, take a good look at some of these items that are coming close to budget and see where we can, either not spend so much or, maybe reallocate other line items that are doing a little bit well. But I would give that maybe another month or so.
Sure.
And besides Public Works, you mentioned snowfall on the weekends. Are there any other issues that have increased costs in Public Works?
Those were the big reasons why their overtime is tracking higher at this point in time. I know that there are some job openings down there as well, which could be a factor in that. But the biggest thing was the snowfalls occurring on the weekends versus during the week.
Thank you.
Yeah, my only comment was that you somehow found a way to make a teacher even more sad about weekend snow. But Mr. Flynn.
Barb, how are we doing with the capital projects?
So capital projects are tracking within the reconciliations that we talked about last month. Pretty much everything is on point at this point in time. As I said, the tax dollars have come in, so we're in a good position for everything to move along, and we don't see anything really tracking over budget at this point in time.
Any public comments, questions? Great, thanks so much. Alrighty, and then we can move on to 4C, which is our quarterly reporting for the American Rescue Plan funds.
So what I've put together here is a reconciliation of the American Rescue Plans at this point in time. The borough is considered an NEU, which is a non-entitlement unit for this federal spending. We were required to report our quarterly reporting at April 30th, but we did promise that we would come before the committee each quarter to also show this reporting as well. So as everyone knows, we were awarded $2,096,419.64 in American Rescue Plan funds. This is coming in 2 tranches. We have already received the first tranche, which was $1,048,209.82, and we expect to receive the second tranche this year. This time frame covers from March 3rd, 2021 through the end of 2024. We have to have all of the monies allocated, and they need to be spent or paid by 12/31/2026. At this point in time, when we reported to the federal government, we had only spent the $230,000 on the Everhart Park project. So this left us with a balance in the account of $818,209.82. The second part of this reconciliation shows all of the projects that have been approved, but which we have not actually spent the funds on. So that total is $357,260, and as you can see, there's a variety of things that have been approved. We just haven't, the invoices haven't come in for those at this point in time. So we are at a balance of $460,950 left in the American Rescue Plans.
Great, thanks so much.
We only could spend on infrastructure and I believe depreciation. Is that correct?
I'm sorry?
We could only spend on an infrastructure. Is that correct? Local infrastructure. Is there anything
So-
else that we could use that for?
You can use the funding for the revenue loss that the borough has calculated for some of these projects. You can use it for broadband to increase the broadband needs, and you cannot use it to put any money into the pension funds. And you can use it to for hiring and for some of the COVID-related employees that had to work during the pandemic.
Do we know how much in revenue loss we've had?
The loss calculation that we calculated was about $1.9 million.
Thank you.
All righty. Any public questions, comments? All right, thanks again. We're good on item 4, so we will hop on to item 5A. I suppose sub-item 1 is to approve swapping to capital technology projects. Yes, which we heard about last night as well.
Yes, I will start off and say we did cover this last night at the Act Committee. They were all the members were very excited about this. I'm actually glad to cover it a second time. So we were scheduled to replace our servers this year. For many reasons, the next generation of our current models have been delayed a year. We were scheduled to start replacing firewalls next year. So we just made a decision to swap the two projects. It's actually saving us about $1,300 this year. And we're just rolling out the capital projects, made those adjustments going out for the next 5 years. There, that kind of shows you where the servers are being moved. And that's really all. But I'm actually excited to do the firewalls now because it's going to extend our cybersecurity efforts at the wastewater plants, which really don't enjoy that yet, and upgrading the equipment at the parking garages, because that's how we connect there for cameras and point of sale and other services.
Yeah, sounds good. Any questions? You want to do it again tomorrow night? We could come back.
If the borough manager allows me to.
I think that's okay. I guess sub-item 2 here is the Public Works State of Good Repair.
So at this point in time, the Public Works Department is asking for $30,000 of the ARPA funds. This is to fund repairs that for the streetlights that it mainly occurs due to accidents. We don't have a line item in the budget at this point in time to account for some of these expenditures. We do everything to the best of our ability to go after, the people that cause these damages, but we still need a line item so that we can, fund these expenditures that are needed.
Okay, so yeah, my perception was that this had to do with the node replacements. So that makes sense. Is this something we can make a note of to put in this upcoming budget? I think that would be prudent. Any questions? Cool. Sounds good to us. And then item 3 here is the High Street corridor improvements.
We talked about in the Public Works Committee meeting last night about what this project entails. I'll summarize in 1 or 2 sentences. This is a $400,000 to $450,000 intersection improvement where High Street and Minor Street intersect. This would be installation of new bump outs on all 4 corners, reducing the crosswalk distances, lowering the turning radii, and essentially making it a safer intersection. Installation of granite curbing, brick sidewalks, street trees in the locations where they're feasible. It is presently at about 30% of preliminary design. And to date, we've expended $25,000 on a prior professional service agreement or existing professional service agreement with TPD Traffic Planning and Design to get us to this point. This new service agreement would get us through the end of preliminary and final design, through bidding, and then through construction administration, which is inspection and making sure the contractor is doing everything to standards in the plan. So the bottom line of this new professional service agreement is $115,000. Together with the $25,000 we've spent would make $140,000. Now that puts your design, engineering, construction administration at about 30% of the cost of the capital project. That's pretty high. Some of this is on the borough because we were not really focused on the scope of the project in the early going. But I've given that feedback to the contractor. We like to see construction administration costs in the 15 to 20% range, not 30%. So little over budget here in terms of what we need to do, get this over the finish line for design and engineering. But this is a grant-funded project. We want to take this project to market as soon as possible to keep our grantor happy. It's Chester County Community Revitalization Program. And they've pledged up to $400,000 at a 3-to-1 match. So that's where things stand. I'm looking for council to consider the new professional service agreement so I can sign that contract with TPD and we can continue down the road of getting the final design done and all the permitting pushed through PennDOT and the bid out on the street.
And question I have is, would it be prudent for us to run this by our emergency services first, like this coming week? Or is that part of this whole process? Have we already done that? Are they in the loop on this?
Regarding the design,
Correct.
they've been involved, but you're absolutely right. They should be involved. We'll make sure they're there at the next roundtable.
Okay. Yeah, it sounds good to me. I know, because this is that High Street, Chester County project, which I think I've
Yeah,
been very impressed with so
The biggest
far.
question was, the tractor and trailers going up and down the street. And we did forget about the fire truck that has a extension ladder on it, whether it could actually turn that corner. And my guess would be, I don't think so. But I don't have measuring tape to go out and tell. But I can tell you the hook and ladder is pretty long. So.
We can put the traffic design engineers can put turning templates on the roadways and figure out if the dimensions work.
Yeah. Good. That's important.
Great. Any thoughts, questions? Anything? Good?
Good.
All right, cool. We can call that 3-0. And then our little item 4 here is to approve Chester County ARPA grant application for Goose Creek electrical infrastructure. How's it going, Will?
Good evening. Will Williams, Sustainability Director. So just like we got $2 million from the feds through ARPA, Chester County got $102 million, most of which is going to be redistributed throughout the county in a competitive grant process. We don't know how much they're keeping for themselves, but we know most of it's going back out to the community. So we don't have a ton of lead time on this grant application. Pull up that attachment, Billy. So we found out about it less than a month ago. But so the criteria, you asked about the criteria for ARPA funding. It's services to disproportionately impacted communities, infrastructure, negative economic impacts from COVID, premium pay, public health response, and provision of government services. The county, in their competitive grant process, has added another lens, which is around sustainability. I think this was influenced by Hurricane Ida. Sustainability, adapting to extreme weather, and resiliency. My interpretation of the grant guidelines is they would like to see more of that. Like all grant programs, they want to fund things rather than services because, frankly, elected folks can go out and cut a ribbon, and it makes for good PR. And best of all about this grant, there's zero match required. So with all this in mind, we looked at our 5-year capital plans from last year's budget process, and we came up with this Goose Creek wastewater treatment plant. It's a substation, about 40 years old, and it needs to be replaced. It's the heart of the plant. That's the analogy that was used by Sean Mitchell when he was telling me about it. But it checks a lot of boxes here. It's infrastructure, it's wastewater, it's resiliency. It's wildly expensive to replace. Go to page 2, Billy. So this is what it looks like. Replacing that is what $1 million gets you now. 1.2. If and when this fails, we lose power to the plant. There's 2 lines that come in, a primary and a backup. We were running on the backup Christmas, I think 2020. And that went down for 12, 16 hours or something. And basically all the staff was working double OT on Christmas. So I asked what happened. I asked the engineer what happens if the power fails. And he said, he thought about it. He gave me the most engineering response ever. He said, we're going to have a compliance issue. I said, what does that mean? And he told me it's untreated wastewater into the stream. So page 3, Billy, is a cost estimate. If you could rotate that. This was prepared last week, so this is not a 2019, 2020 cost estimate. We're confident in these numbers. And we're preparing an application. It's due Monday. So a little bit awkwardly, we don't have time for full council to approve the fact that we're doing this. But again, there's no match required. There's no resolution required. I asked them, hey, could we write our own resolution and send it to you 2 days after the application? They told me, don't bother. We don't want it. But it's a best practice that any grant application goes in front of council. And the only other thing I'll mention is that we're asked for a construction timeline. And we've prefaced that by saying, if funded in full, here is our timeline. If we receive an award that's less than 1.2, that might influence our scheduled timeline. So we're very clear about that in the application. I've heard in the last week from 3 different sources that they are not getting many submissions, and they're concerned they actually won't be able to give away all the money in the first try. So we're going to do everything we can to solve that problem for them. And so what we're looking for tonight is just that this committee recommend to full council next week and approve our submitting this application 2 days prior.
Yeah, this is actually one of the few things that like keeps me up at night is this.
There's 5 to 7 council members.
We literally will be SOL.
Yeah. So this project is 25% of our projected capital spend for the next 4 years in the wastewater plant. So it'd be huge to get this.
Excellent. I will never forget that Christmas for many reasons, and that being one of the bigger ones. I was ready to like get down there and get dirty if I had to. But 5B is an amendment to professional service agreement O'Donnell Nacardo Construction Management for a bicentennial garage.
Yeah, Donald Nacarado is our consultant who's been working with us at the infrastructure improvements at both Chestnut and Bicentennial garages. I don't go out of my way often to thank consultants in public meetings, but they've done a really good job of keeping contractors on schedule, to the specifications in the bid documents, and getting things corrected, and also educating me. I know more about adhesives and temperatures and reinforced concrete and positive ionic intrusion into concrete than I ever had before. So I'm really happy with the professional relationship with the Donald Nacarado, in particular Paul, who's our lead project manager on this endeavor. What I passed around to council was a summary of expenditures to date on a sheet that looks kind of like this. And a couple things I want to draw your attention to. If you look at the summary chart at the bottom, there's a bid price for construction. There's the alternate we awarded at $14,250. That's the facade cleaning, which they subcontracted out. The low bidder was Hudak Infrastructure, and they also were the low bidder at Chestnut Garage. The design, engineering, and project management we had originally agreed to was $48,600. They're asking for an extension of that to the tune of $6,900, which all told brings us to assessment, design, engineering, bidding, construction administration, total of $55,500. On a sum total project of $356,000, 15.5%. So that's a good, compared to the conversation we just had, this is a better ratio of design engineering work to overall project value that we like to shoot for. We did not have a good budget number for this when we were thinking about this. So the way this was managed last year was we forestalled some of the capital expenditures that were in the budget, knowing that the Bicentennial Garage came in over budget, and we came in a little under budget on Chestnut Street Garage, and then again over budget significantly over budget on the painting of the handrails in Bicentennial. So we did some horse trading last year to make sure we didn't overspend. So don't be shocked that there is a $111,000 gap because we've already dealt with that, with forestalling certain things from last year's capital budget, namely the structural analysis that was in capital budget, I think to the tune of $80,000. We just didn't do that. We were going to find a different way to get that information and at a lower price. So what I'm asking, I'm happy to take any questions. What I'm seeking from council is an approval of this amendment to our professional service agreement to get us to the finish line with Bicentennial, which we are currently at about, I want to say, 2/3 of the way there.
Any questions?
No.
Any public questions, comments, concerns? Okay, great. Yeah, it sounds good to us. Item C here is to approve the resolution to authorize Sean Metrick and Barbara Liani as signers on Druis pension and capital operating accounts.
So we are requesting this resolution to be signed. This mainly comes from the transfer from BB&T to Truist. And this is just a request to put Sean Metrick on as the borough manager and then put myself on as well as the second signer.
Sounds good? Alrighty, and then item D is our minutes, which was just fine. All right, is there any other business tonight? Alrighty, then at 7:16, we will go ahead and adjourn this meeting. Thank you.